Start off with your view on the market, because I was listening to a trader yesterday and he was saying that there's just no confidence out there right now, and even stellar financial reports, even the increasing dividend payouts we're seeing come to the fore is doing little to act as a catalyst for the Nigerian markets at this stage.
Looking at the way the market is now, even with the result posted by most organizations and most companies in the market, we still see the market on a bear run. The bear still dominated the market throughout this week. What it tends to mean is that investors expect more than what the corporates have actually declared to the market, especially the banking sector. The banking sector, we've seen a lot of profit taking in the banks, and the banking sector makes up a significant portion of the market cap, thereby leading to a decline in the ASI so far.
Taking a look at the picture, I mean, most financials, as you say, out with results, good numbers, good dividends being declared. If that's not instilling confidence right now, what do you expect to instill confidence specifically amongst local investors that have been shying away from this market?
Confidence has really been eroded by local investors. We've seen more foreign participation in the market so far, with foreign participation standing about close to 70%. And looking at the local space, we've seen more of institutional investors in the market. I believe, from my own point of view, I believe if the corporates can continue declaring good results in the future, this might restore confidence in the market. And on the part of the regulators, if they can bring in more legislation and more policies that can aid the market, this will also instill confidence in the local space, and we'll see increased local participation. From the pension point of view, pension has increased the limits which PFAs can actually invest in the market from about 25% to 50%. But even at that, it's still left to the fund manager to decide how much of his portfolio we intend to invest in the capital market. And I don't see, in the short run, I don't see the portfolio manager wanting to increase its stake in the capital market, looking at the attractive rates posed by the fixed income market at the moment.
Just how tricky business do you see this being addressed? Because we're seeing the continued sale of fixed income securities by the DMO, by the Central Bank of Nigeria as well, and that to finance the federal government's budget deficit. Many saying that will crowd out the private sector, but on the other hand, it also poses competition for the equity space as a whole.
Yeah, it poses a lot of competition in the equity space. But as I said earlier, if the corporates listed on the exchange can continue to provide good results, pay good dividends in the long run, and if this returns outnumbers that of the fixed income market, we'll see gradual return into the capital market and equities market, and this will help the capital markets in growing.
Let's hone in on some of those results. ETI was a standout performer in terms of its results this week. We had it posting profits up 57%. It declared a dividend as well of 63 kobo. What did you make of those results overall? Because it seems that the markets took little out of it in terms of its share price reaction.
Yeah, we saw a very impressive result released by ETI. The earnings were up, the profits were up. The ETI as a whole in general gave a good result to the market. But they paid a dividend of 4 cents, and from the looks of things, the market was actually expecting a higher dividend from ETI. So with this actually reduced the pace at which we will have seen investors getting on board ETI. But looking at the way it has traded so far, there's actually been an improvement in the share price of ETI and activities of ETI. But we just expect it to we expect a gradual and not an aggressive growth in the share price and investors' attraction to ETI.
It's very interesting because it's in a context where we've got this company pursuing a very aggressive growth strategy itself. I mean, we had just this month the CEO saying that ETI is expected to focus on organic growth, specifically to be amongst the top 3 banks in each of the 30 countries it operates in. What kind of confidence do you have on the company's strategy on a pan-African basis?
Well, looking at ETI and a strategy, I think it's a good one for the organization, and I believe that with the organic growth the organization is embarking upon, this will lead to a growth in their earnings, and with the growth in their earnings, will lead to improved profitability, and at the end of the day, more money in the pockets of investors and shareholders of ETI, and this will definitely have a positive effect. And at the end of the day, we expect the share price to inch up with this positivity.
Of course, we focus on the reward and the opportunity. What about the risk? How much risk do you factor in with the bank's expansion across Africa now nearing its end in terms of a geographic basis and it pursuing this strategy further?
Because ETI is course across so many Pan-African countries, I believe it should be able to they should be able to diversify their risk across board. And with diversity in risk, at the end of the day, they should be able to bring their risk to a level which it can be managed and a balanced level. And with this, I don't see it posing a threat to them achieving their main objective.
A quick look in at Presco's results. So full year 2011 results being released. It's proposed a dividend of 1 naira as well. And of course, this a company that operates in a sector that we don't often look at because it deals with palm oil within the agricultural space specifically.
Yeah, Presco paid a dividend of 1 naira, which led to a dividend yield of about 10%, which is very, very attractive. Looking at most of the other banks that they even declare up to 10% dividend yield is a good one for Presco. Their earnings improved significantly, and we expect this to have a positive impact on the share price, which we've actually seen because the share price has actually grown in the market since the results was released, and investors are taking it positively.